Hello, welcome back to Weekly Market Recap. Here with Knight. Let's get to it. So this past week, amazing week in the market for returns, both the Nasdaq and the S&P 500. So the Nasdaq rose 8.09%. We're still down year to date 27.63%, and the S&P 500 rose 5.91%. We're still down year to date 16.22%. So the real reason why the market moved dramatically was CPI. So let's get right into it and see what happened in the market. The market's really a tale of two halves for this week. You see a little bit of volatility leading into the first half of the week, and then what happened right here? Massive spike in the S&P 500, and then for the rest of the week, just up and to the right. So what happened here? CPI came out and frankly was awesome. The market loved it, and let's talk about why. And we'll talk about the CPI report in a second, but before, let's talk about what were the expectations. So for month over month, the expectation was 0.6%, and year over year, it was going to be 7.9%. Now, most of the banks, Goldman Sachs, JP Morgan, Morgan Stanley, all had their expectations, and none of the banks were expecting inflation, CPI reading to come in soft. Everyone was thinking it was either going to come in at 0.6 or higher. And what did we get? We got 0.4 month over month and 7.7 year over year. So we came in softer than was expected. And let's get into the actual report. So as I said, rose 0.4% in October and 7.7 headline over the past year. So both of those came in softer than expected, and the market just absolutely loved it. Now, if we look over the past 12 months, we see over the past 4 months a pretty large decrease from what we were experiencing back in the summer months. And now let's look at the other graph that we really like to look at, which is the CPI headline, all items, is in blue, and core is in maroon. And as we've seen this trajectory for the headline number, we saw that peak back in June for all items. And then core, we did see start to trend up, but one of the good news for October is we saw this trend down. And now we get to some of the key categories. So the one that still came in relatively hot and higher than expected was shelter at 0.8%. But really everything else, we had fuel that was obviously, we knew that went up dramatically in this past month. But again, we saw it down a few months before. But besides that, I mean, commodities, again, down, used cars, down. So for the most part, a really, really good reading. Let's get into some of the broader categories. So again, this is the all items. So food and energy are first. Let's get into all the numbers over here. And we're all the way on the right. We do see, again, some gas services went down, but in the all items, less food and energy. And I just want to see where all the negatives are. So commodities, again, that being negative, that's good. Used cars and trucks, you already talked about that being negative. Airline fares, negative. More negatives over here. Let's get through some of the food, but even then, food, we're seeing a lot more negatives. Energy, not surprising to see some of the larger positives. But wow, just look at this page. All items, less food and energy. We're just seeing a lot of negatives. We haven't seen a core reading like this all year, just negative after negative. That's such good news. Apparel, overall negative. Men's shirts, sweaters, larger negative. Footwear, let's see, used cars and trucks. Video equipment, negative, large negative. We're just, again, we haven't seen a reading like this. You can look, at the other months, and there's so many more negatives right now. Look at the smartphones, down 6% almost in 1 month. And again, the one area that we're still seeing relatively high numbers is shelter. So rent of shelter, lodging away from home also went up pretty dramatically. So that's 0.8, which is higher than what we were expecting at 0.7. But one of the main things that we've talked about a lot is shelter inflation lags. And we've seen a lot of current data saying that rents are going down, and the Fed knows that. So really, this reading is just so positive. I'm still looking in just health insurance negative. That's a great number. So just so many different items going down. So this was the first really strong reading of CPI in a while that we've gotten. Now, the market reacted dramatically on Thursday. We shot up, and Friday even continued that rally. The one thing that we need to still be cautious of is there's going to be one more inflation reading. So in November, there's going to be another inflation reading, and then we're going to get the next Fed decision in December. If we have another really good inflation reading, we keep seeing prices continue to come down, we could still see the market rally off that news. However, the opposite could happen. If we get a really bad market reading in December on inflation, all the progress we just made this past week could immediately reverse and go the other direction. It's still so data driven, and the Fed needs to see multiple good readings in a row. One thing we've talked about a lot on this channel before are the break evens. And we discussed how the break evens usually have a 3 to 6 month lag. So 6 months ago, we saw break evens at the highest point of 3.59. And then for the next 6 months, we really saw it come down even to a low of 2.14 back in September. If the CPI reading is going to follow this trajectory, we might have just seen inflation peak and start to come down really dramatically. And again, that's what the market is hoping for. And this is a really good sign. And so the market is reacting accordingly. Now, again, if the break evens are telling us what we believe, and it holds that trend of 6 months prior, so now we're looking at what happened in March and May, significantly lower, but that's that real big drop that happened in May, all the way up from 3.39%, and we get down to 2.88, and that's what we're experiencing. And then we might continue to see these drops further. So right now, why is this inflation CPI reading so important? CPI reading comes in soft. The Fed might not have to tighten as much or hold it at that level for as long. They might be able to start reversing course again, and that would just be great news for multiple reasons. One, the Fed is so focused on getting jobs down. Well, if inflation comes down, they don't care at all about sending the economy into a recession. They can soften their stance. They can start stimulating the economy again as long as inflation is coming down. So they can stop all of that. But if inflation remains high, they're going to continue on their war path of destroying demand, getting the jobs market back into balance. So really, all eyes are going to be on what happens in December for the November CPI reading, and then December for the Fed and what their policy decisions are going to be. But this is an amazing reading, great news for the market. The market reacted really positively. We might continue to see some optimism, but it wouldn't surprise me if we see some more volatility as we get closer to that reading in early December. Another slight tailwind for the market was obviously that the elections finally happened, and looks like for the most part we're going to get a split Congress, and that's always, for market returns, there is a divide within Congress and a stalemate, basically, that nothing can get done. The market likes, okay, no aggressive policies on either end are going to get put through, and so the market can kind of just react. So there's a lot of optimism with just how the federal government for the market wound up, and in addition, all amazing CPI reading. The Fed might be able to be slower and slow their pace and be more optimistic for 2023. So hope this explains why we had such a big move in the market today. As always, I'm here to support you. Your mind's here to support you. See you again next week.